If you're someone who owes the IRS a large balance, let's say $50,000 or more, the biggest mistake you can actually make is waiting too long, then getting into an urgent, time-sensitive situation, and finally, following it all with doing the wrong thing. Because at this level, the IRS doesn't treat your case anymore like a small balance case. They escalate. Revenue officers get involved. There's bank levies and payroll garnishments that become real. And at this level, one bad decision could cost you thousands or even tens of thousands of dollars and your long-term financial stability. This video, I'm going to walk you through the five biggest mistakes that I see taxpayers make when they owe over $50,000 and what it is that you can do to avoid those mistakes. So let's get straight to mistake number one, ignoring IRS notices. That's the first mistake I see is the taxpayer ignoring the IRS and their notices. And most people are just thinking, I just need more time or I'm going to deal with it later. But here's the actual reality of what happens. The IRS is following a very specific collection timeline. First, you get the CP14 notice telling you you have the tax debt. Then you get several reminder notices and the final notice of intent to levy. So you're seeing increasing urgency along the way, and then enforcement is going to begin. By the time you get to that final notice of intent to levy, the reality is your options and the time you have to get them done are already shrinking. So ignoring the problem doesn't really buy you time. It just costs you leverage in the long run. So let's move on to mistake number two, assuming you're going to qualify for an offer in compromise. And a lot of taxpayers that I meet with think they say, I owe 100,000, but I'm just going to settle. I see all those commercials. I'm going to settle for pennies on the dollar, or I'm going to get a settlement for a whole lot less than what I owe. But that's not how it works. The Internal Revenue Service uses a formula that's based on your income, your allowable expenses, not your actual expenses, but your allowable expenses, and the equity you have in the assets. And if you have the ability to pay them, you're likely not going to qualify. And then here's the real problem. Most taxpayers, they delay chasing and offering compromise when they should have been setting up a payment plan that was their best strategy or another strategy a lot earlier. A lot of them don't realize that the filing an offer in compromise tolls the statute of limitation for the time that the offer is pending plus 30 days. What does that mean? Well, it means that the IRS only has 10 years to collect the tax debt, but the clock can be extended. And one way it's extended is when you file an offer in compromise, and from the time it's been received and it's pending until that decision, that rejection is made, that clock has now rolled an additional X number of months plus 30 days. So mistake number three is not filing all required tax returns. This one is actually really critical. I have people come to me all the time. The IRS is threatening me. Can I get into a payment plan? And I'll say, well, we got to get these tax returns filed first. We got to get in compliance. They don't understand that if you're missing tax returns, the IRS considers you non-compliant. And if you're not compliant, you got to get into most resolution programs. You can't settle your tax debt with an offer in compromise or get into a payment plan, and you're not going to be able to stop collections long term. Also, if you haven't filed your tax return, in many cases, the IRS could file a substitute for return for you. What are they going to do there? Well, all of the income that they're aware of, they're going to report for you. However, for example, if you have a business, they don't know about any of your business expenses. So your income is going to be overstated there. If you have dependents, they don't know about them. You're not going to get those credits and so on. So what's going to happen is your tax liability is going to be greatly overstated, and it's going to increase your balance dramatically, making a payment plan even larger than it actually should be. So before anything else, you need to get compliant. Mistake number four is setting up the wrong payment plan. So you've waited a while, you're now in a critical situation, time sensitive, and you end up setting up the wrong payment plan. Remember, not all IRS payment plans are created equal. The IRS's job, if you call them, is to get you into a full payment plan where you will fully pay your tax debt over the statute of limitations. That makes sense. That's their job. Your job, your goal is to find the best strategy for you. And so for larger balances, choosing the wrong payment plan can lock you into unaffordable payments. Remember, if you have a small debt, you might be paying $50, $100 a month, affordable for most people. But when you have a large tax debt, you may be paying many hundreds or actually many thousands of dollars per month, which makes it much more unaffordable for a lot of people. And if you end up not being able to meet those obligations, you'll default and make it even worse. Another thing is you may end up paying more than you have to if you set up a payment plan that isn't the right strategy for you. So over time, what all of these decisions are going to do is put you in a even worse financial position long term. At higher balances, remember, you still have pretty much all of the options you did at lower balances, even though some of the programs change. You can get into a full pay installment agreement. You can get into a partial pay installment agreement if you qualify or currently not collectible. Or you might be able to settle your tax debt with an offer in compromise if you qualify. There's also perhaps there's that 10-year statute of limitations, depending on the age of your tax debt, what you owe, and so on. You may have a strategic use of the statute of limitations that you need to consider. But here's the thing, the wrong setup here can cost you tens of thousands of dollars over time at that dollar amount. So mistake number 5 is waiting until enforcement begins. This is where things get really serious. A lot of taxpayers wait until their bank account is levied, their wages are garnished, or a revenue officer is assigned. At that point, remember the IRS has already escalated your case. An Internal Revenue Service officer, an RO, has the authority to show up at your home or your business, demand financials, and they most likely will demand a lot of your financial information with deadlines. And if you don't meet those deadlines, they can push enforcement activity quickly, and it'll move much more quickly than with a smaller debt in ACS. You always have more options before enforcement begins. Waiting puts you in a defensive position. If enforcement's already began, you're in a defensive position now. You're in a crisis situation and you're responding just to survive. So if you're someone who owes the IRS $50,000 or more, this is not a situation where you want to guess your way through it. Strategy matters, the timing matters, and avoiding these 5 mistakes as well as some others can make a major difference in the outcome of your case. If you want help understanding your options, I've included a link below where you can schedule a consultation, and it's also in the description. Here's the thing, even if you don't contact me, at the very least, start taking action now, because with the IRS, doing nothing is usually the most expensive mistake of all.